Good afternoon. Welcome back to the watch list. Kind of been a choppy week, but sort of trendy. We don't know. There's a few things we're looking to short and a few things we might be looking long on, just kind of hovering here and seeing what happens next. Um, Again, we appreciate you guys' support and, like and subscribe. But above all, tell your friends. We are driving for more subscribers here so we can build this out and do a heck of a lot more. So if you like what you see, we do appreciate your support. But yeah, tell your friends. We know you talk to people about trading and investing, and we give you the goods. We give you guys lots of stuff to work on, and not only that, we teach you how to find it yourself. So we don't just give the fish away. We teach you how to fish. Anyway, how's your week going?
So far, so good. This has actually been a fairly quiet week for a change.
Good deal. I noticed MSTU was starting to pick up some steam there, and
Great day yesterday, and I mean MicroStrategy's all over the place today. Opened up huge, and
yeah,
now it's down. But I mean, we could be up 17% by the end of the day, and I would not be surprised.
no kidding.
We're down 17%. I would not be surprised.
I think moves, and now we've got some pretty decent charting on it. Let me get the big screen up here. Hold on a second.
And we have weekly options on MSTU.
Yes, we do. So that might be my next wheel trade target too. I was late to it though. I mean that's takes a lot of capital.
Way early, unfortunately.
I meant to get into wheeling it before the options had enough liquidity, and it's like, I'll wait because I like having the liquidity where I can actually, make some decent premium on it. But yeah, I missed the boat on the run because the share price appreciation sure would have did a hell of a lot better than the premium income for sure. But then again, I did grab some NVDX, so I mean that's been doing great. I'm contemplating selling either 21 or 22 strike covered calls on this, but I might be a little more patient and wait until tomorrow. It seems we're at a point where we could see NVIDIA break out and start running higher, or it could reject here. So we're kind of waiting for the shoe to drop. Worst case scenario, I go sell some more puts instead. My cost basis was underwater a little bit for a while there. At 1805, I sold some puts a little bit too soon. I'll get in the swing of it. It'll still be profitable over time. But I love that income strategy because I can just be so patient. Being even that far underwater doesn't faze me. I'm comfortable with it. I can always go and
just remember, cash covered put NVIDIA ETF coming soon.
Oh yeah, I can't wait.
And MicroStrategy.
Again, if you ever need any analyst help on that, not like we don't analyze stuff together anyway.
Yeah.
I'm all over it. I love looking at options. It's my bread and butter.
And my one I'm doing one on the Qs. I just told him to revise the prospectus a bit to allow me to do 0 DTE if I want.
There you go. Those are always fun.
We're gonna have fun with the Qs.
I think so. And then, heck, it would be almost easy to balance that. Instead of running swaps, you can almost run futures with that.
No. I mean, no swaps. It's just gonna be cash secured puts.
Okay. Even better.
Plain and simple.
That way,
exchange traded or flex. I'll figure that out when I get there.
That way it doesn't have to be leveraged. Cool.
Right. Yeah. No leverage, no swaps. I want some non-swap based funds.
That works. So
yes.
Speaking of NVIDIA, we're right in the edge of our previous measured move target here. We've had that target up here. It was like 147 and some change here. 147.60 was a previous self-proclaimed analyst target, which we nailed beautifully, but now we're kind of pushing up to it. We got it on either side of the move here. This looks a lot like a bearish reversal to a lot of people except me. I never short these until they break, and usually we know where the liquidity zone is pretty readily in this. Worst case scenario, we get some news pop out and NVIDIA drops like a rock to like 140 real quick. But I think it bounces there if it does, and then we resume. But if it breaks this pivot and runs higher, remember the really big measured move that we looked at took this whole trend in place. And my gosh, that's got a lot of room to move. So Yeah, I think it was a good idea to get into wheel trading NVDX for me. Just saying.
And also from a learning perspective, if you're a counter trend person like me, going back to the beginning of October, there are two times where Nvidia broke below the 50-day.
Right.
Both of those would have been pretty nice entries.
Very true. And it's the old adage is we make money faster in a bear market. The market always tends to take the stairs up and either the elevator or the window down, depending on what side of Wall Street you're sitting on. But yeah, you know, um, you get some pretty interesting trades anyway. But typically in a bear market, it's fast and furious and wide. Back in the day when we were first getting into running Bullish Bears, it was swinging. I mean, you could just point at a chart and make money, running the bullish trades. But then when the market broke finally, that's kind of when I came into the picture and I started getting my bear teeth out and just killing it. It was insane how fast we could absolutely rip 100% plus day trades on just simple put options on pretty much everything. But we looked at QQQ and SPY and just absolutely ripped it. It was a lot of fun. And that's kind of fun to be a guy who makes himself in a bear market, whereas that's kind of the opposite of what most people do. Most people make themselves in a bull market. So here we are. But again, I'm a different guy. My beginnings are very humble, and they remain humble. I don't care how much working capital I end up with. I just keep a cool head and just trade the chart. I don't have to really worry. Anyway, let's look at a couple of swings we saw setting up, and I guess I can start with a couple of your picks here. Let me see here. It was you're looking for short stuff too. You're shorting.
Yeah, I mean, I'm bullish. I mean, do not get me wrong. I am not bearish in any way, shape, or form. I just think we're looking a little bit toppy. A lot of the names on my watch list are curling. And I'm not seeing a lot of great short setups, but I'm seeing some. And also it looks like the VIX is bottom. So I would not be shocked to see a little bit of jump on the VIX and, a little bit of a sell off. And then I'd probably get out and switch back long.
Agreed. And, it's got plenty of, let's just say volatility. So, I mean, it doesn't make you a bull or a bear. It just makes you I'm going to trade opportunity. And you can just roll the chart. And you were, talking about being in a bearish position on XLE yesterday, which did very well, and it's still got a gap to go possibly here. I mean, it could go way lower. Right now, it's right in what I would call the LZ of where if buyers can't take it here and it breaks that support area, hello.
Yeah, no, my timing on that. I mean, not that I tried to time it, but it ended up working out. So we're up pretty nice on that right now, and. I'm going to watch what it does around the 50-day here. I mean, if it pulls an undercut and rally, I might flip back long. But, just because overall it looks like things are due for a sell-off, I'm inclined to give it a little rope.
Right. I mean, long-term trend has been pretty bullish overall. And, taking advantage of the quick bearish scalps is always nice. But I always look at the weekly chart, sometimes a monthly chart, but it looks like a choppy looking cup and handle setup to me. This is where the handle would be. So, we've got this little channel coming down. If it holds support in that LZ there, I think we got a good shot of turning this into a cup and handle and then coming up with a bullish measured move higher. So energy's kind of hanging in there, but this is where we'd expect some volatility and then coming out of this. If it
and
remains
that's
bullish.
The cool thing about being agnostic between long and short. I mean, if it flips around and looks like a long, then that's where we go.
Exactly. You just do what the chart tells you to. Everything's fine.
Yeah.
And sometimes I reference, using your lizard brain to trade. And after you've done it for a long enough time and you've remained successful and you've spent a lot of time in the seat looking at the charts, you can just kind of glance at the chart and just know what to do. I mean, it's almost an instinct at that point. Don't call it a gut feeling because trading with emotions is a bad idea. But, when you kind of know that you're looking at a chart that tells you, hey, we're likely to continue running higher here, or there's a reversal, or whatever it may be, it'll be obvious to you after a while, and you just glance at the chart and be like, I know what to do with that. Cool. Just scalp it. You can basically trade the chart and ignore any bias, and in doing so, you alleviate FOMO, and you don't have fear of missing out. You just wait patiently for the chart to tell you what to do, and you trade it. Our primary focus here, and why we can maintain such a high accuracy when we make call outs, is that we look for the easy charts. We really do. I mean, if it's obvious and we've got a really great setup, trade it. And more often than not, we're right. It's funny. We start out bagging on Kramer, and now we're just like, you know what? The charts just tell us what to do. We don't have to be inverse Kramer. We can all still make money. We can crack wise on them once in a while. We still see Kramer bars all over the place anytime he talks about something. As far as XLE goes, though, I think we got a pretty good shot of maybe bouncing out of that little zone and giving us a reciprocate trade. But for now, shorts are having it. If anything, you get a quick bounce out of this liquidity zone, run for regression in the channel, and trade this part of the cup and handle. The long term eventually looks bullish, but for now, the hype is over. It was overextended. It was a great short. Pretty simple. If you caught on when we were going over the nuclear theme that we absolutely just completely killed it on, same scenario. This is all part of the energy sector. When we scalped the runs on all of the nuclear stuff, and we're out of them now. We just wait patiently for the next move. Getting into that, some of the infrastructure is kind of looking nice, and I picked up NFE not yesterday, the day before. This is beautiful. I really wish we would have got this on our Tuesday show, but I didn't.
I really wish I would have bought it when you told me about it.
I didn't notice it till early yesterday, and I picked it off, and I got long, and that measured move's pretty beautiful. It'll give us some long-term stuff too. I think we got this giant rounding bottom here. I mean, that's pretty obvious. This is one of the obvious charts we look for, and given the weekly chart, it's gone everywhere we expect market structure to go in this move. Okay, monthly chart gives you the rest of it. Reversion trades abound in this guy. So if you realize that this is where rotation's happening, you start breaking into a trend here. Cool, we got reversion trades possible. I'm a little more short term than that, so I'm looking for this little measured move on the daily here. I'm going to probably take profit off at about 12.65. But if this thing breaks out and starts to trend, it could be a double. Hold up at $11 and run to 22. Yeah, I like 100% moves. Just be mindful that you don't want to let FOMO take over in that situation, and you want to know where your resistance zones are going to be. And we're just about against one right now. There's one right here. You can see the previous high. Obviously, there were some sellers there.
Yeah, I mean, that 1230 level, it rejected at 1225. So that could end up being pretty important.
Yeah.
If it breaks through it, there's a lot of white space.
Oh, yeah. And it's just, parabolic to boot. Anytime you see this kind of move, the reciprocate move is usually equal. So, if it breaks this zone, we got some serious bullishness ahead. We'll wait and see. But for now, the short-term trade, playing out beautifully. I'll be looking to probably profit that pretty quick here. And if it finishes the measured move, even better. 1260 is my ultimate target on this for the short, medium term here, finishing out this measured move. But it can certainly accumulate. Half a move is okay, too. And you can see the half level is right here at the bottom of today's bar on the open. And if we range here and we hold about 1150, 1160 or so, we could see some follow through and shoot for the short-term bull target. But if it breaks over here, well, trade the half back. You can always go and run the bearish side of the trade to about 1050 and then see if we can pick up a long after breaking out of that. In the meantime, the long-term chart tells us we got potential for a big move. So stay with it. Don't blink on this one. SQ I was talking about. Oh God, man, what a win! What a breakout! Yesterday, the strikes or the remaining position I have open on those call debit spreads was right around 82 cents at yesterday's close. I could have profited the rest of that position then, but I mean, this position is negative cost basis because I already took advantage of the first part of this trade and took some risk off and ended up with negative risk on the remaining trade. I'm gonna let it ride a little while. I got January 17th expiration on this. If it holds here at about $97 and continues to run higher, that thing will be killer. But I mean, you got to remember, I paid 4 cents a piece for these spreads, and they were trading at 82 cents yesterday. That's a 2,000% return, guys. I do that sometimes. You know? So, if it runs higher, cool. If not, I can be fine here. Even if I get knocked back to 1,500%, I'm not going to cry. I've already made pretty good on this one. So, I'm willing to live a little and let it edge out a little more. It's got some room. But the other thing that kind of pops into focus on this is that PayPal's setting up the same way. Let's go to market structure looks here. Go to the monthly chart. You recognize that. This is essentially, yes, it got chased and hyped all the way up, capitalized all the way down. Accumulation came down into a range, broke, didn't quite touch the all-time lows, but made a pretty good move down and then accumulated once. Trend started here. We're at resistance now, but if we break out, 119 is an easy jump. So let's look a little bit closer at this. There's a liquidity zone that's pretty obvious here, and we are just outside of it now. There's a pretty good shot of this thing following through with exactly what SQ did, and a couple levels to watch. Pretty obvious here. I'm going to skip this one because it's just an edge, but looking at this high is where I'd see the next zone kind of play out here. So we can say maybe this hits a $100 bill, and then in the short term, and then in the long term, if this thing prints a full measured move out of that, let's give you the rest of the story here. Full measured move from that point up takes us right to that 119.27-ish area there, the reversion trade target. So keep an eye on this bad boy. It can really, really give you some good plays. And I haven't even looked at eBay, really. Let me glance at that real quick while I got it.
I haven't looked at that in 100 years.
Right?
Yeah. I mean, you could buy it here on an undercut and rally at the 50-day if you wanted to. But
it's reasonable, yes. When you compare to PayPal, I mean, PayPal kind of got started by eBay, I think we could say that pretty much.
No, I think, PayPal was part of eBay and they rolled it out.
So, I mean, would they be kind of symbiotic in that sense? Maybe, but it's already made its measured move here. So if this rejects here, get the half back. But if it holds here, yeah, undercut and rally, roll it. As far as short-term stuff goes, another measure move is completed here. It's done the half back, so keep an eye on it. eBay could follow through with it as well, but it's kind of led the move on PayPal, which is why we would even look at that. Sig and I, one of my favorite options nerds to hang with, we were talking about this about 3 months ago with PayPal setting up, and we were also into SQ, and SQ followed through beautifully. PayPal was the other one we were talking about at the time, about 3 months ago, and I think PayPal's got a pretty good shot of following through what SQ did. And there's a few other disruptors in the financial sector that have kind of done what we wanted to do. SoFi was one of them. Gave us a blast beyond target, and now we're in a full-on 2-for-1 measured move. We reached that the other day here. Same scenario. You start looking at the problems we were starting to recognize with the regional banks and transactors, the outside or the fringes or small business transactors primarily, gets some good good focus. Let's just say that that's a pretty good off the wall trade. You go into pretty much any mom and pop shop anywhere you go, you see a Square terminal or a what are they called now? Sorry, brain dead. It's that time of day again. Block. That's what they call themselves. You see one of those terminals on a counter. I mean, just about every ice cream shop, just about every mom and pop you walk into has one. It's inevitable. But yeah, we know what's up. We watch those sectors. As far as themes go, I think we're kind of just playing with the short-term stuff through the rest of Q4 until Inauguration Day, I would say. But are you looking that far ahead yet, or are we kind of waiting for things to play out first?
No, I mean, I've still got all the same themes, but I'm not going to chase. Luckily I was, a lot of crypto. I got calls on BTCL and ETU, so that has been helpful. I mean, I don't know if you saw Trump's tweet today, but when would you ever see a soon to be president tweeting congratulations for Bitcoin going over 100?
Right.
That's I mean, that tells you we're in a whole new world for crypto.
Oh yeah. Yeah, crypto's been I mean, I've been kind of on again, off again with it. I just hate dealing with all the stuff. 'Cause I do my own taxes. I hate dealing
Well,
with
I
all
mean,
that.
I just buy calls on BTCL and ETU
That's the way to do
or
it.
puts if I'm bearish, but I've had calls. I mean, my BTCL calls have been great. I mean, I know I'm way late to the game, obviously, but
Well,
I'm up 484% on my BTCL calls, and I've been trimming all along the way.
yeah, just kind of take some profit off as you go and take the risk out. Tanner, I'll get to you in a
I'm up
second.
109% on my ETUs. So
Nice. And then you just launched another one the other day. Was it what is it? PEIC? I can't remember.
oh no, that was the Rex guys. They launched SEPI. That wasn't me.
Gotcha. Okay. That's
The covered calls are their thing. Cash covered puts are going to be mine.
perfect. Get the yin and yang in that mix. Nice.
Yeah,
I like it.
we're going to battle it out.
So we have a couple comments from Tanner here. Sorry, I wasn't ignoring the chat. I was just tied up. He's looking at Toast and Uber. Let's have a
Well,
look.
Toast, I just went short today, so I don't like it short term.
Yeah. I mean, we had a target on it, 37.56 a while back here, and it nailed that and blasted above it. And essentially, it made a 2-for-1 and pulled back. So now it's hovering right at that target. If it can't find support here, it might be an even better short sooner. But
I mean, Uber looks like a short to me. Also, I just prefer, like, if I were going to short Uber, I would have shorted it, in the 80s. I don't know that I would short it here.
right. Finish Toast. I'd be careful here. If you just got this low here, maybe get a quick scalp back for a half back to like 39.80 or so. But be nimble here because this thing's extended quite a bit. I'm not sure I would stay long in this unless it continued to trend here. And then let me check Uber real quick. See, Uber a while back. I mean, we were talking about this when we were still beating on Kramer. Never made that 2-for-1 measured move. It rejected here. It came right back, gave the half back. And then not this recent earnings call, but the one before that, it dipped into liquidity here, back into our primary move here. And then it bounced, made the half back and that again. Right now, let me borrow these. I'm thinking we might end up with a bearish measured move on this. So this looks like a decent short to me too. What the heck? I didn't know I had one that was black. It disappeared. My background's black. I do that because I'm sensitive to light, and I have a few friends who are sensitive to light, so I love having a black background on my charts. Plus, I have a dark sense of humor to match, so why not? I would say the half move here, target bearish, would be about 61.60, and full measure move target might break this low here and tap 53, but I would be focused on the short term. I think it may give us a good bounce right at 61. And then where's the, let me get the moving averages up here. Settings. I always take the 50 off. My chart gets too crowded, so I tend to try to keep the moving averages to a minimum. But essentially, once you break this 50 period here and you have this move where it gapped right down to it and then dropped below the next day, you could say that this would be about your block move. And if you were to, use your lizard brain and draw the simple part of this, here to there, that gives us about a little more extension on this thing. So like you have a primary target here at 61.50. Go for half of this, like 63.50 might even be your best short-term target for the Bears on this one. But when you get a gappy chart like this here, typically if they bounce, they end up filling those gaps later. So you might be a little bit early on your entry into this thing going long there, Tanner, but be nimble if you're taking losses on this thing. I wouldn't FOMO into holding that too long. But again, if it starts to give us that short target, we could see a bounce there and return to this mean here. Let me check the monthly chart out. That's a nice pennant at the top of a very long parabolic trend. So yeah, the shorts are pretty much lining up on this thing. Unfortunately, it's going to be a pretty bloody day, I'm afraid. In previous times, that's right about where support would be anyway, so about a half our measure move down. But eventually, we'll like toast. What else were we looking at? There was a couple of things I wanted to revisit here from last week. Well, one is Apple. That thing is just cruising on up. We're not quite to the half measured move target here yet, but we've been parabolic in this breakout so far, so I'd almost expect a little bit of a pullback here. Again, I've got some really nice debit spreads open on that are in profit now. I got short-term ones that I profited to pay for the long-term ones. So it's a zero risk position for me now, and I'm just waiting, biding my time
If
till
you're
it's that target.
if you're a breakout guy, the weekly chart looks really nice.
Yes, it does. And that's where that measured move comes from is that weekly chart pulls up the primary and the secondary on this pretty readily. Although I didn't split the whole range here for my blocks. So let me go ahead and do one more favor to that real quick here. So let me take that high to mean. And I bet you that gives us a more reasonable target for the short term on this where we're at right now. Right there, half a move. So that's why we're seeing a little bit of selling pressure here. But if we hold that around 241, 242 and start to continue higher, cool. Bulls have it. So Apple doing very nice. Ultimately, if it hits 282.20 in a repeat of this move here, yeah, I'll hurt my elbow, pat myself on the back. In fact, I've got tennis elbow lately. But short term, I would say the halfway target, that 250-260 is a little more reasonable for this particular breakout, just to be so that I'm not getting greedy on this thing. Greed, pigs get slaughtered in this market all the time, and you never want to be greedy. Just be happy, take your profit, move out. My SQ trade, same scenario. I'm not greedy with it. I can be and leave some position on with it, but I mean, come on. You see a 2,000% return, you got to close some of that. AMD kind of never gave us the full bearish move here. We held that liquidity zone. We like some of the chips. Some of the Mag 7 is starting to look pretty good to us, but I don't know. Could we be a little more patient and wait another couple days before we start to get trendy here, or what?
But AMD?
AMD, not just particularly AMD, but a lot of the chips in the Mag 7 stuff.
Well, yeah, I mean, there's the good chips and the bad chips. I'm not a fan of AMD. What's Marvel doing? Yeah. I mean, I don't like breakouts like this, but you could buy Marvell and use 109.57 as a stop.
So ticker on
MRVL. So that broke out yesterday because something related to AI.
More AI
so
hype.
that could be actually interesting. It's not far from that stop level.
Think you might get a quick short on that and then resume the long-term trend? That's possible. And then
yeah, I don't know that I would short something that popped on AI news in this type of environment. I mean, if it popped on something else, maybe. But Yeah, I mean, I might actually think about this for myself. We'll see.
It's a little extended there, in my opinion, but I think, yeah,
Yeah, but I
you know,
mean, the stop is not. I mean, your logical stop is, you know, 5 points away.
right, give or take, 113, 110 be about reasonable.
I mean, I would use the low of the gap.
That was a halfback move already. Ha. Cool. Yeah, it could give you either side of this. I like it. I'll
Right,
keep that on
and
the
if
radar.
it breaks the low, you could see it refill the gap the other way.
Right. This would be a good scalp trade. I might day trade this one. Responding to a request on the YouTube channel here. First, I want to look at AG, and then I'll look at NEM for you. AG, we were talking about last week, and we're waiting for it to hold support around this area.
Yeah, this thing's pissing me off.
It's teasing for a breakout, but again, it has that.
And actually, what I should have bought is I should have bought PAAS.
Would have been a better trade, yeah. And then, you start looking at miners and you're like, well, we could do this, we could do that. But then gold kind of held a range for too long and metals kind of followed through with it. So I wait.
And I like AEM better than I like Newmont.
Yeah. And that was the question actually was, where was it? Looking at NEM. So I'll look at that next. AEM is right at the diamond pattern level here on the weekly, and it just threatened to break out, pulled back to support. If you were to draw an angular there, right across that. Let's look at the daily and see if we got range for momentum here. Well, let me refine that a little better. Let me start over. I messed that up. Sometimes my pickiness is getting the best of me. So anytime you break an angular, you almost certainly test it for support. So this could give us a good breakout here. And then this has a powerful primary move behind it, so it could go way higher. That's a good selection. And then let me take a look at comparatively NEM. NEM gave us a 1-for-1 up and a half back already. So if it can't find support here, yeah, AM would be the better trade. But let's look for this to hold in this area here. If it breaks below that previous low, it's a goner. It'll go for a 1-for-1 down. But if it holds here, it could be bullish eventually. Let me take a look further out here. Monthly. It's got a pretty good chance of holding here. But again, metals are kind of iffy these days. I've kind of said it before where, like, a lot of people were like, oh, let's park our money in silver and gold. And yeah, it boomed for a while there. But I mean, realistically, inflation's going to deal with that when you convert it back into cash. It's a great place to park money and retain value. But for me, the performance on it isn't as impressive as what I could do with equities and ETFs, obviously. So I don't know. It's sort of like
I would be watching the gold and the silver miners.
Yeah.
I think they've gotten beaten up a bit with the Bitcoin move, and people are looking at it as an either or trade. I don't think it's an either or trade. I think it's a lot of similar stuff. And again, one of our big themes is the Fed is clueless.
Right.
And Powell reiterated that last night where he, basically said, hey, the economy is cranking, inflation's going up a little bit, and we're lowering rates. And you're like, well, but why? I don't get it. Whenever the Fed is clueless, people look for precious metals. So, it hasn't worked great. I think my GDXJ has done pretty well. I'm doing well on GDXJ, but the individual miners have been problematic. I should probably just look at GDXJ and see what's doing well, but whatever.
Yeah, it's just for me. It's not one of those obvious charts that tells me, hey, this is an easy one. So I mean, yeah, we can say if this then that. We can make those statements here, and we can wait patiently for the follow through on a breakout or a breakdown, whichever we end up getting. But you end up in that situation and you realize, well, is it going to be a theme or not? Cool. We can be patient and wait for that. But in the short term, we can still scalp the volatility. So, I mean,
Yep.
for a day trading and maybe an overnight or a 2-night swing trading type of people, it becomes useful. But I'm more patient when it comes to the long term stuff. So I'm going to wait and see what happens with this. I mean, sometimes you'll see like the inverse head and shoulders here. You got the left shoulder, the head, and the right shoulder potentially here. But it did break the neckline first. So this can end up being a good short for a little while. It's hard to say. In the short term, though, I mean, this does not look like a double bottom yet. So be cautious here. Be a little bit more nimble than most, if you will. Couple other little things to look at and revisit, and I was on this one, BMY. You know, same scenario, different area. We had the bullish measured move. We broke out of it. We went a little overextended here. We hit that 59.71 pivot, which was a reversion target, if I recall. Yep. And same scenario. Well, we've got the hat back. We're done. What's next? Well, plenty of other more interesting things to trade. So as far as I'm going, yes, it is a theme I'd like to focus on. But at the same time, in the short term, I've got a lot better things moving. You know, a lot of stuff in the financial disruptors, I've called them, you know, like SQ and stuff. That interests me more. So I just tend to trade them. And then there's long-term energy. You know, we went into CCJ, nailed it. The target was beautiful. You know, we've hit it. Now we're sitting here waiting for the next move. Is it going to go higher and hit this 2-for-1 measure move? Probably. It's got a pretty good shot at it. But, you know, for all intents and purposes, we did what we did. We're good. I loved CCJ. That was a great trade, by the way. Couple others to revisit, and you know, BTU, we're still kind of hanging in this 23 area, waiting to see if we get the reversal back through it. You know, as far as energy goes, just be patient. It'll give us some moves, but the energy infrastructure, I think, is going to be a little better in the short term. That's why that was a pretty obvious trade on NFE there. But watch the sector. It'll give you some signs on which way to take it. As far as other long-term stuff goes, let me see here. You had a couple other shorts that were awesome. Which one was I looking at? I know you're short on Toast. There it is. FOUR.
I didn't end up taking this one because I was looking at it this morning and it was bouncing.
Yeah,
But I'm watching this.
turns to a nice double bottom. It's kind of prone for a quick halfback move to like 106 first, and then maybe it'll continue to dive. I mean, a good call out on
I'd
it,
really
though.
like to see it break the 50-day.
Yeah. And it's right there at wick just above the 50-day there at about 98 and some change there. So yeah, be patient. It might give us a good setup. If it gives us a really good trade, we got liquidity down here. We can obviously see right around 88 and some change, maybe 89 or so. That could be a decent short. So be patient on that one. That might give us a nice, beautiful 1-for-1 down. That'd be a block move of this bar. But wait for the half back. If it rejects that 20 on today's candle, cool. We could see a nice short on this thing still. Good eye, though. XLF. And then you've got what is it, XLRE?
I mean, it doesn't matter. IYR, I went short today, and I also went short the home builders XHB. XLF, I'm waiting on.
Yeah. This could end up being a bit of a cup and handle, the two on IYR. I was kind of checking out. So if it's giving us the half back, you know, maybe it bounces here, maybe not. But if it gives us a good short, yeah, we got an epic trend down to like 92.50 is possible. That'd be cool. I'll be patient on that one too. But yeah, we're looking at, you know, mostly short-term stuff between here and the end of the quarter. Inauguration day is going to play hell with the market, I'm sure of it. But I think we'll have some really, really good themes to focus on from that point. I know you were looking at like the counter ESG stuff starting to pick up some steam in that too. And
Yeah, so we've got ESGX, which is the only politically neutral ETF out there. You know, I think you're gonna see people looking for things like that. And, back when ESG first started, stocks that made it into those screeners traded at a premium. I think you could see that relationship flip.
Yeah, I could see that, and you get into, even though it's politically neutral, you get into the grand scheme of things, and one Muppet cracks her teeth chipping it at a podium somewhere, and things instantly change. It's kind of funny.
Yep.
I'm being asked to look at FIVE. So is that Five Guys?
No, Five Below.
Five Below. Oh yeah.
Yeah, Five Below.
I like to buy candy in that store. I don't know why. They always have good deals on bags of candy for some reason. Looking fairly bullish for a reversion trade. I mean, we got liquidity right up here at that obvious candle there. It's gone parabolic on this current move, though.
Yes, yeah, it's moving on something, and it's a retailer.
Yeah, it's being chased.
Unless this is going to be an Abercrombie and Fitch type of move, I'd be careful.
Everybody loves to look at the daily chart to see that gap and go, "Oh my gosh, it's going to go higher." Don't fall for that trick. Look at the weekly chart, guys. Look left. Always look left.
Yeah, you look at the weekly chart, and it's
yeah. I mean, this was a really nice.
You've got your obvious kind of triple top up there, and then just
right. It gave us a really good.
I mean, retailers are cool for a trade, but I'd just be careful.
Yeah. I mean, it's if you got in on that rally this morning, great. I mean, you kicked butt, but just be nimble. Don't chase that higher. That's what FOMO does to people, and that's the 200 right there. So it's kind of locked into that. Can it go higher and hit that reversion trade target to like 139, 140? It sure can, but that's going to be a lot of people chasing hopium out there. So don't get caught up in that mess. In the meantime, let me go look at some shorter term charts on this. The 2 hour kind of gives us the clue here. So, 1, 2 for 1 and an extension. I would say look for a pullback to about 112. Give half this bar back, and if it holds there and continues higher, cool. We can follow some more of that trend. But this is nuts. This is people chasing. Everybody and their mother jumped in on that. It's already over. That is your market maker liquidity right there. Someone had some exit liquidity in that and did well. Not saying they're shorting it yet, but if it breaks that level, it breaks into this bar, just short term would be, a quick half back on that candle, 112,
they announced the sales beat, so that's what happened here.
Gotcha. Makes sense. Like I said, I buy candy in that store, and whatever that margin is, there you go. It's in the chart. Yeah. I know a lot of people who buy little knickknacks and stuff there, but other than that, I catch the little deals they have on some stuff every now and then. But for the most part, for me, it's very similar to shopping to a place that does closeout on convenience stores. You know what I mean? It's like you go in there and it's like the stuff you would see in a convenience store.
Yep. Yeah, I think I've only been in once, but when my kid had his internship at his hedge fund, I think he did a report on Five Below.
Nice. I mean, it's a good business model. I mean, it's a lot smarter than, well, Pick and Save was smart at one point, but then it just they kind of became that mom and pop company that's trips over a dollar to pick up a dime type of people, and then that model slowly failed. These guys have a little bit better opportunity because they have a little bit better buying power in liquidations and stuff. Occasionally, I'll go and look around in some of the stores, and I guess I can write that off as doing market research anytime I leave the house. But you look at it like this, you go and figure out what's got the attention of people in the market space when it comes to retail, and you can make some pretty good trades on that, just recognizing trends when you see them. Everybody's traded Costco and Walmart the same way. You go into something like this, and the margin on liquidation, it's often very, very good, but sometimes it's not. Sometimes there's a scarcity of liquidation, so that's when these guys tend to have issues. So if suddenly they don't have as much of much inventory coming in to be able to keep that margin up, it tends to be a little bit of a volatile market space. So that's just my opinion on it. That's what I can see from some guy on the outside. You go into like some of these other stores that liquidate stuff. It's the same thing. Sometimes their shelves are just slammed and stocked, and you can just go through there and have a field day and save a bunch of money. Other times they get picked over, and then they have very little, product coming in, and they kind of have their shelves empty. And empty retail space is useless for profit. So, kind of make common sense out of things when you go into those places. Just look around, keep an eye on things. It'll tell you the story. Let's see here. Oh, anytime. I love doing technical analysis. So throw me a ticker. I'm happy to look at it. You guys are very welcome. And I appreciate the feedback on the chat, by the way. I'm apologizing for getting late responses to that, but I'll get to them. Even if I got to make a special edition and do it after the show. We're all about that. Looking at a couple other retailers, TGT was one of my favorite shorts ever. It finally followed through with
what's the symbol?
Target.
Oh, yeah.
That was great. And then now I'm wondering, if you look at the weekly chart, is that the biggest IHS pattern you've ever seen in your life? I don't know, man. I think if they start dialing back the, I don't want to be political, but if they start dialing back the wokeness a little bit, they got a chance, But until then, they've been great for shorting. Every time they pop up, it's like whack-a-mole.
Yeah, pretty much. I mean, you got that level from back in August that it got rejected at.
And then you look at the other end of the spectrum, like Walmart was, kind of on the attention span of everybody this morning, and pushing 95.60 was pretty good. It's just been trickling along in the stair step pattern here for a while, and it's at all-time highs and keeps pushing them. At some point, this has got to pull back, and I'm thinking it's like $98. Just off the top of my head, is about where I'd love to see a pullback and come back to earth at $85. That'd be cool. In the meantime, the bulls have been chasing the crap out of Walmart, and I think Walmart's pretty much on a path to never figuring out how to lose money. They've just been growing and growing and growing. I remember when they were brand new, no one even heard of them, and they're still a successful business model. One other space I wanted to look at, and I've lost my train of thought on it. It was. I know a lot of people are swearing about Disney.
Talk about woke.
Yep. I enjoyed playing whack-a-mole with that thing for so long. It just, it lost its thrill. And, I think by about the end of 22, I was pretty much done shorting it. And then it popped up again, so I whacked it again in 23. Would I do it now? Wait a minute, because some things are getting shaken up in that space there, and the fans have spoken. So, would it be reasonable to short this here? I don't know. I think I've lost the magic on that one. So to speak.
I mean, if it definitively broke the 10-day moving average, where, right now it's 16 cents below, but it's not really doing a whole heck of a lot.
Yeah.
That could be interesting to kind of fill that gap to the downside.
I'd love it. About 104 would be a beautiful target for this, for a good short. But I almost wonder if it's a trap and they start flipping the script and say, okay, we're done with woke, and start coming out. Walmart dialed back woke, and here we are in a parabolic trend. We're kind of kicking around the idea of the go woke, go broke ETF.
I could launch that at any minute. I just have not done it yet.
Yeah. It's kind of been on the back burner.
Yeah, but the issue here, Walmart's one of those companies that just kind of blew with the wind and then blew back. Disney, it's endemic.
Right.
So it's not as simple as saying, hey, we're not going to do that stuff anymore. that it is for like, a Walmart and, Molson Coors and, guys who flip-flopped.
Well, and Coke is one of them too. A lot of people forget that. I enjoyed shorting Coke for a while, and now it's kind of hit the level once that I was shorting to around $60. That was
I mean, that's one. I mean, obviously, this is an RFK move,
right.
but that's one you could watch for another RFK move. He's talking about making Coke have pure cane sugar instead of high fructose corn syrup.
Yes,
I don't know. I mean, I have no idea the numbers on that, but I'm assuming you use high fructose corn syrup because it's way cheaper than cane sugar.
that's true. But at the same time, I think that health conscious consumer has always been willing to pay the difference when it comes to putting better stuff in their body. So yeah, okay, you make a lot of product and sell it to people, paying cheaper prices for the sweetener in it. Great. But what happens when everybody starts switching to pure cane sugar? I mean, Hawaii's only so big. There's other places they grow cane sugar, but I had a thought on this a while back that ties into the whole EPA mandate back in the day when they started saying, okay, we're going to put ethanol in fuel and subsidize corn farmers. Put this together. The waste product from sugarcane can be used to make ethanol much more efficiently than corn. The waste product from sugarcane. That kind of puts a thought in my head. I almost wonder if this movement to have RFK start demanding that these soft drink companies switch to pure cane sugar can produce an environment where you wouldn't need to subsidize those farmers, and the waste product can be made into ethanol, and then you stop subsidizing corn farmers. You see where I'm going with this? Suddenly, It makes environmental sense as well. So I can see that maybe if this takes off, if my theory holds correct, inauguration comes up, we touch a low again down here to $60 on Coke, and then they say, okay, fine, we'll switch to pure cane sugar worldwide. I think they become profitable again. And in spite of that, that
I
twice.
see a job for you in the Trump administration.
Hey, man, thanks. That's a compliment. I'll take it. I mean, it just kind of makes sense to think about things like that. What's and you've talked about it too. Like, well, who gets hurt in the situation, and then you kind of think conversely, where should I be looking next? And I wonder if that could be the theme. I would love to see subsidies get cut to corn farmers because that's destructive. It's actually bad for the environment in the long run. If you've ever paid attention to the Midwest aquifer, it's been absolutely getting smacked by corn production because of the water consumption in that. Ooh, better thing for the environment, the waste product from sugarcane. It just makes sense. There's a lot of energy there to be had. It would make environmental sense. It would make economical sense. And above all, it'd be better for our health. Can't say enough about that. I think that could be a theme. Right on. Well, we're kind of dragging on here. It's almost 12:30. I hate to run out of things to talk about, but if you guys got a couple tickers.
There's not a lot going on. Today is just flat.
Yeah, it's one of those boring days, but sometimes guys who get into day trading make really good money on boring days. I traded some of that choppy range this morning, and I'm done for the day. But I'll take a quick look back at one other thing just before I go. Was it NVO? Yeah. NVO hit that bear target down here. I marked that out in purple here. It broke it, came back to the liquidity zone. We might get a reversion trade out of this, guys. Watch for it to hold around 107, and we could see it come back into this little golden zone I have here, 112, 113. If it flies through that, the reversion trade's obvious. Even higher, 118, 119 is pretty reasonable. So I'm watching this one. This was one that someone requested I look at. We had looked at it before a few times, and we've traded this range pretty well. But this is kind of looking like it could hold support here and give us a good reversion. It's on the radar again. Let's just say that. Should we end with that?
I think that's about it.
All right. Well, we'll see you guys next week. Thanks for joining us. We really appreciate the support. We appreciate the subscribers and, everybody liking the channel and stuff. give us a little more of a favor. Tell some of your friends. We want to grow this to something way bigger, and we really love helping people. I mean, that's what we're here to do. So, I mean, if you're a long-term investor or you have friends who are long-term investors who aren't even interested in learning how to trade, tuning into this kind of stuff, we can really give you opportunities to help your friends out and make better decisions on when to enter their buy and hold position, for that matter. We're not financial advisors, but we can take the chart and turn it into useful information for you, and that's a definite bonus. And there's no license needed for that. We just do it, and we enjoy it, and we love helping. So give us a go. I guess I got a quick second. There's one more request here. ACRS. What's ACRS?
Find out.
Hey, bottom play. I love bottom fishing.
Aclaris Therapeutics. Wait, where do you see a bottom play?
It's already done.
Oh, yeah.
I'm looking at just a quick reversion. Look at the previous trend. So ignoring this high here, halfway back, it's done it. That's a short seller magnet, in my opinion. I love shorting pharmaceuticals. That's one I would do. Don't chase that higher.
I would think you got to figure out why. I mean, look at this. It just flatlined. No volume, no nothing. All of a sudden, you've got a breakout on some volume, and then massive volume. November 9th, middle of November, whatever those days are.
Yeah, I never like chasing these. The obvious bull flag here. I'll show you one trick. We got a couple minutes. When you're looking at a bull flag, give it the 60-40 rule, right? It's got a 60% chance of follow through, a 40% chance of failure, always. They're pretty much set in stone on bull flags, right? You're not the only one looking at this. You're looking at everybody who wants liquidity to take profit on this. They're going to look at it too, and they're going to be like, hey, if people think it's going to go this way, I'm going to be ahead of them by a limit order, and I will be victorious while they're chasing it. I love to look at the second impulse in a bull flag here. So we got the high, we got a swing low here. Well, I can adjust that, but I'm going to use this as the second impulse to that angular. And I'll show you a trick. I call this the trap detector, but it's more than that. So if you see this break out and people start chasing it and it rejects right here at about $4.50, beware. Scalp it and walk away, because if they start to sell that there, they will rip it to the downside and revisit this low. It's unanimous. It almost always happens. On the other side, if they grab liquidity and the bull flag ends up being, true and valid here, look for support. Notice the 2-hour 200 period is right there. Same scenario. If they grab liquidity here and the market makers want it, or the long-term investors or the big money wants it, that's where they're going to grab it, right about $3, and they will rip it to the upside and shoot that high. It's almost inevitable. It's like shooting fish in a barrel when you realize this scenario on a bull flag. So just be nimble, be careful with that. I wouldn't just FOMO and chase it higher, expecting this to break out and rip faces off. Market structure doesn't really work well with pharmaceuticals. They spend decades hemorrhaging money developing stuff, and unless they become, a big conglomerate like, one of the big pharmaceuticals, which almost never happens, it end up just fading away and eventually getting delisted. It's inevitable. And let's look left. Are there any reverse splits in this one? I almost always see them on these. It's a miracle that I haven't seen one yet. Maybe there's a chance in hell with the right management. Cool, but yeah, the bottom play's done already. I would wait on this. This is like something that would be similar to what started my day trading and swing trading adventure with BPMX. I would scalp, 9 to 11% of it every day and accumulate a position while it was flat, just like this. On this day, I was out, and I turned like 20 shares into 4,000 shares doing that accumulation process. I'm not the only one who does that, and they know where this target is. That's done. Be patient. You'll find a better place somewhere. All right. Thanks again, guys. We'll see you next week on Tuesday. Have a wonderful weekend. Enjoy the market. It's going to be sideways for the rest of the day. Maybe tomorrow we get a good play out of this. We'll have to see where the rest of the data falls this week and go with it. Next week should be fun. We should be seeing some better volatility next week. And I think we're going to probably have some better setups for you next week. Until then.
There could be a jobs number tomorrow. I may be wrong, but.
Yeah, that was the other thing we're waiting on is the jobs number. If you want to spend a minute, we can look at QQQ. We were looking at all these bull targets and measured moves played out beautifully, and we're right up against resistance just the day before the final number that we're waiting for. We either get a nice pullback and hit the liquidity down here for a halfback, or we blast through and just start melting like crazy. Who knows? Wait till tomorrow, and we should have something that definitively ties this into make it or break it moments. And next week, volatility, I'm sure.